So I think what sets Alamos apart is really our focus on returns. We run the company like a business, a bit different from some of our peers who have been more focused on growth and growth at any cost. As a result of that, we've positioned the company so that we can be successful in a low gold price environment. We've got a strong balance sheet and low cost operations. So when the industry is in a downturn, we're uniquely positioned to be able to take advantage of that and acquire companies at reasonable valuations. From a capital perspective, we really question everything. We're a small company, we're a relatively small management team. Multiple departments are involved in our quarterly business review meetings, and we look at all aspects of every operating decision. We've absolutely seen the benefits that our executive team anticipated through the merger we completed last year with Alamos Gold. We were looking to build not only a bigger but also a better company, and I think we've successfully done that. The benefits of diversification are that if one asset's underperforming, the others can be outperforming to make that up, and we've seen that throughout this year. In terms of unexpected benefits associated with the merger, I think we've really benefited on the people side. The management teams of both Alamos and Alamos meshed extremely well. We've picked up an in-house technical team that's been able to make a number of significant operational improvements across our asset base. Alamos's focus on building out their development pipeline is a cautious and financially conservative one. We're looking at generating sufficient free cash flow from our existing producing assets to be able to self-finance our development pipeline. Alamos is in an enviable position in that we don't need to do anything. From an M&A perspective, we've been active while the market was depressed, and we're able to complete the merger with Alamos as a result. We're fortunate to have a robust development pipeline. We control the timing and pace of development of those projects. So we'll look to continually strengthen our balance sheet, position ourselves such that if there is another market downturn, we can be aggressive from an M&A perspective. Otherwise, we'll look to grow internally and continue to focus on lowering our costs and increasing our margins. Looking into 2017, I'd expect gold prices to go higher yet, and I have strong conviction that longer term the gold price is going to be substantially higher than where it is today, and that's a function of scarcity in the industry. There's very few good assets, development projects coming online, and ultimately I think supply and demand fundamentals have to enter into the gold price equation. I think absolutely the industry needs to change. Most of our peers are facing declining production profiles, and that's a function of limited investment in exploration through the most recent downturn in prices. So I think something's necessary. Innovation, technological change that improves the way we find gold or how we process it is absolutely going to be required in order to keep production at its current levels. Failing that, the industry is going to shrink.